Good afternoon, everyone, and welcome to the Better Boards webinar on new rules for non-profit tax reporting and the implications, featuring guest speaker Professor Myles McGregor-Lowndes from the Australian Centre for Philanthropy and Non-Profit Studies at Queensland University of Technology Business School. Chairing our session today is Paul Paxton Hall, Director at Paxton Hall Lawyers. Welcome to you both. We have over 200 people registered for today's session, so I ask that you please be patient with your questions. Feel free to add your questions using the question icon, not the chat icon, at the bottom right of your screen, and they will be addressed in the order that they were received. This session is being recorded, and you will receive a copy of the presentation at the conclusion, when I will also be pushing out a very short feedback form, which I kindly ask you to complete. Now, without further ado, I will hand over to Paul to deliver the welcome to country. Welcome, Paul.
Thank you, Kelly. So I begin today by acknowledging the traditional custodians of the land on which you are participating today and pay my respects to their elders past and present. I extend that respect to Aboriginal and Torres Strait Islander peoples who are with us today. As part of the 2021-22 federal budget, the government announced that it had provided $1.9 million of capital funding in the 2022-23 year for the ATO to build an online system to enhance the transparency of income tax exemptions claimed by exempt non-profit entities that were not charities regulated by the ACNC. The requirement comes into effect from 1 July 2023, and the ATO will require not-for-profits with an active ABN who self-assess as income tax exempt to submit a self-review return each year. The first return will need to be lodged for the 23-24 income year from 1 July 2024. It will be an online annual self-review form with the information ordinarily used to self-assess eligibility for exemption. Our format today is that Myles will be stepping through what we know so far, and there are three separate Q&A breaks in Myles's presentation where we'll take questions. So without further ado, it's my pleasure to introduce Myles.
Thank you, Paul and Kelly, and welcome everybody, and welcome those that may be viewing this video at a later time. Just a word that this is going to be a fast-moving area, so if you're looking at the video, you might want to check for any updates to the material, as I suspect in early 2023 the ATO will be starting to pump out information about the self-assessment proposal. Well, firstly, we're going to have a look at which organisations will be subject to providing the ATO with an annual digital self-assessment review of their income tax exempt status under Division 50 of the Income Tax Assessment Act 1997. There are over 30 categories in Division 50, together with special conditions for many of the categories. It is a section which needs to be tidied up, a division which needs to be tidied up and rewritten, particularly to prevent overlap with ACNC charities. But more of that later. So the self-assessment of your tax status will not be required by those charities that are registered with the ACNC. So they're excluded from this project. It applies only to those with an Australian business number So if you don't have an Australian business number and you're a non-profit, at the moment, this will not apply to you. Further, it doesn't apply to government bodies. So looking at the broad categories of the over 30 subcategories that it will comply with, let me just have a broad brush as to what is covered. Firstly, if you're a charity, then you really should be registered with the ACNC. The ATO seems to have indicated that they think that there may be a number of charities that are not registered with the ACNC, but claiming Division 50 income tax exemption, and they indicate that they will be directing them to register with the ACNC. Education, for some reason you're a school or another education establishment but are not charitable. Education is, for the advancement of education, is usually a charitable head, but for some reason you don't qualify to be a charity, you will be covered. It may cover professional bodies that provide education, but the ATO, I think, will be looking very carefully at those professional bodies providing education only to their members. There probably needs, in the broad brush, to be some public element to your education. And science, so this has a very broad definition. So if you're an organisation for science and scientific purposes, in the general sense, you may well be covered. The next broad heading is community service, and we'll have a look at this in more detail in the coming slides, because I think most of those on the seminar will sort of fall into the community service heading, but these will traditionally include the traditional service clubs, the JCs, the Rotaries, the Zontas, the Apex clubs, and the like. Employer and employees. So this will include unions, and it will also include employer organisations. So they will be included. Government, we will leave that alone because they're exempted from these provisions. Mining is a very specific provision. It doesn't mean that if you're a gem club or some other club to do with mining that you're going to fit within there. It's very specific. Primary and secondary resources and tourism. These are quite technical. So if you're promoting the agricultural interests in a certain area, you may qualify. A number of the really big organisations which formerly fitted under this heading have in fact reorganised themselves and moved to charity status, believe it or not. And then another large heading, sports, culture and recreation. The ATO has just released a new, updated, refreshed ruling on the Commissioner's view of what qualifies as a sporting body. And there has been a deal of case law on what is a sporting body, particularly with the football clubs and who have poker machines. So that's pretty well referenced. Culture, so literature, music societies may well fall within the definition of being an exempt organisation. So who are these organisations? Do we have any sense? We don't really, because they're not required to register anywhere. But this gives you, a ballpark sense of a really rough estimation. I think most of it's community service, and we'll deal with that in a moment, followed by sport, education, cultural. We do think, I particularly think from the work that I've been able to do, that most of these organisations are very small. there are only a couple of hundred or so who'd have $1 million turnovers. Most of them would appear to be quite small organisations, probably under 50,000 or 100,000 assets and turnover each year. Yeah, so that's the sort of demographics, but we really don't know. Let's deal with community service. This is contained in Section 5010 of the Income Tax Assessment Act 1997. And the legislation says it's a society, association, or club established for community service purposes, but it carves out political or lobbying purposes. So the ATO website indicates that associations of justice of the peace, playgroups, traditional service clubs, pensioner or senior citizens association, industry ombudsman, all fall within the ambit of what they regard as a community service club. The explanatory memorandum, which accompanied the provision when it was put into law, gives it a fairly wide interpretation. It really means altruistic organisations, for some reason, were not found to be charitable. The ATO tends to say that member only or member benefit associations, where there's not a majority outward-looking community altruistic theme to the organisation, probably would not, in their view, apply. But really, it's a matter of looking at the circumstances of each factual situation and what you actually do and what the Constitution says. The ATO on its website lists some organisations which it would usually not include. So public speaking or debating, social forum for retired or semi-retired business people, clubs that expatriates of a country, pension associations that conduct significant political lobbying activities, military service, and social clubs for newcomers. So the theme there is sort of altruistic, outward-looking organisations will be in. That's not the end of the story. As I said, Division 50, for each of the categories or many of the categories, you've got to also qualify for some special conditions. And these apply to various categories. They don't all apply, and some different ones. But for here, it's the in Australia test. So if your community organisation has its physical presence in Australia, you probably need to go no further to satisfy the special condition. If, however, you don't have a physical presence in Australia or conduct significant business overseas, then you may need to go further into the other criteria of the section. Let's move on. So what's going to happen if you've been assuming for years that you are income tax exempt under Division 50, but don't fall within some of the categories? And I suspect this is going to become a rude shock for many organisations, because the last little while I've been asking people as I bump into them, is your association tax exempt under Division 50? And they say, Division what? And after explaining that, I said, self-assessment of tax status mean anything to you? And they scratch their head. I think many of them are going to have difficulties fitting under one of the 30 or so categories under Division 50. So what happens? All's not lost. There is a common law principle of what we call mutuality. And this applies to membership organisations which only deal with their members, and only have income, if you, and that's in inverted commas, only have funds from their members, and sell things only with their members. And the principle provides that where a number of persons contribute to a common fund created and controlled for them for a common purpose, any surplus arising from the use of that fund for common purpose is not income by the common law definition of income, and therefore not taxable under the taxation arrangements for income in Australia. The principle, however, does not extend to include income that is derived from sources outside the group. So as my little example down the bottom there, membership fees and sales, of tea towels or logos or badges between members and the association will not be regarded as income. But things such as sponsorships from outside the organisation, rental income if you have premises and rent something to someone, or government grants are likely to be considered income. So in cases where you have mixed mutuality income and external income, there are detailed provisions on how you apportion that. And if you've ever been, well, I don't really go to licensed clubs, but very much, I'm a bit of a sad individual, but if you go to licensed clubs, you often have to sign in a non-member or they take a note of a non-member. So a non-member who buys a drink or a meal at the club, that's income derived by the club, which is outside that of membership and the common pool and fund. And so that may potentially attract and be accountable in income tax, whereas a member will not. So there's agreed formulas for clubs, which are quite common, and you'll find that all on the tax office page. So that's the common law doctrine of mutuality. Where you have a club just with members and their own funds, it will not come within the definition of income with respect to any surplus. If you have to, if there's no other exemption available, you're not a charity and there's no other exemption, you have to pay a tax, then you'll be required to file an annual income tax return. You'll be treated probably as a company, unless you're a trust, but I think most will be treated as a company. The first $416 of your taxable income will be exempt. I might just note here, because I can't help myself, that level of exemption hasn't been altered since this provision in the Act first arrived in the 60s or 70s. My view is that it's well overdue to be raised, and I hope that the government raises it to a sustainable level. I think that's only just, otherwise it's just a massive bracket creep. And then the tax is shaded in, so you get to pay company tax as companies would. Probably for most organisations, if this occurs and they're small, it's not the tax that you'll be payable, it's the cost and inconvenience of actually calculating and keeping the records, because keeping tax records can be a costly and exacting arrangement. So I'll draw a breath there. We will follow on in a minute to having a look at how you do a self-assessment, and I'll take you through one for a community organisation. But Kelly or Paul, are there any questions so far?
Myles, thank you. We don't have any questions typed in at the moment, but we'll give that 1 minute because people could be possibly typing them now that you've prompted. I'm just wondering if anyone else is having trouble seeing the presentation, can you please let me know in the chat We have one person who is seeing the spinning wheel. I'm not having any trouble from my end, but it looks like there's a few other people with this problem. Those who are having the problem, please perhaps change your browser to Chrome if you haven't already done so. That is the recommended browser for this platform. So we have some people saying that it's spinning and some saying that it's fine. So I'm hoping that once we get onto Chrome, we might be fine.
I know there are a number of lawyers who were on the list of participants, so if they want to chime in with any war stories or issues they're finding in practice, please type away.
Okay, we have a question now, Myles. Alex is asking, can the ATO provide definitive advice on which category you belong to?
Yes. Yes is the answer to that question. You can apply for a private ruling and set out your circumstances, and the ATO will deal with that and provide an opinion about what classification that you fall within. There's also an ATO helpline that you can ring, which will go to not the usual helpline for the tax office, but to the non-profit tax section. You can find that on the ATO website. I might say that one question that I have in the back of my mind is that if you have a private ruling, and I know many organisations do from the tax office, whether you'll still be required to file a self-assessment return annually if you already have a private ruling. So that's one question that will probably be answered early next year by the ATO.
Thanks, Myles. We have a question from Dom saying, could you expand on the meaning of recreation organisation in 50.45?
50.45, yeah. I don't want to get too prescriptive because of time, but if you, it may come under the sporting classification, or let me just read the exact legislation. I'm just having a look. The heading is 5045 sports culture and recreation. So that includes society or association or club encouraged for the encouragement of animal racing, art, game of sport, literature, or music. A society, association, or club established for musical purposes. And also under that category is the International Cricket Council Limited, which have their own classification as you do when you've got the ability to influence politicians, I guess.
Thanks, Myles. We have another question from Trevor. Can you get a ruling on an Indigenous not-for-profit community group?
Yes, you can approach the ATO for a ruling on any tax issue, but they have traditionally provided rulings on whether you qualify for a Division 50 income tax exemption classification.
Thank you, Myles. Now we have a question from Brian. Would a non-charity religious organisation be one where membership is confined to a select group?
Would a non-charity religious organisation? Well, it could. I'd need a whole lot more information to say whether you were a charity and therefore would be required to register as a charity. the ATO is of the view that there are a lot of organisations claiming division. Well, there are a number of organisations claiming Division 50, which should be registered, which could qualify as being registered as an ACNC charity, and the law, the Tax Act, directs that you register if you could qualify as a charity. As religious organisations with members would normally, in the great bulk of circumstances, qualify under the religious head, and therefore the charity head, they'd be registered with the ACNC. In fact, about a third of the ACNC register is what we would call a religious charitable organisations. Now, there may be some reason why your religious organisation is not charitable, but you would want to make sure that that was the case, and if so, then you may well register, or you may well be exempt under Division 50.
Thanks, Myles. We can move on. It's 1:25, so we might move on. There's no more questions in this section.
Thank you. We'll move on quickly. What does Division 50 self-assessment involve? The ATO suggests that you self-assess annually that you are tax exempt, and apply for a private ruling if you're uncertain, or ring, and there's the phone number to ring the ATO, and I believe that goes to the non-profit specialist section. The ATO, what's a self-assessment? It's not defined in the Tax Act, but the ATO provide self-assessment forms, and I believe, not certain, but I believe that the ATO will be holding stakeholder consultations to revise these forms in the coming period. There is one at the moment on the ATO website for sporting societies, associations and clubs, and another general one for like community purpose organisations. I think that my guess is that both of these will alter in the next little while, but at least they give you an idea of what the ATO is thinking. Nowhere in the Tax Act does it say that you must, you shall do a self-assessment. It's just reading between the lines that if you believe that you're tax exempt, that you either seek a private ruling or make that a proper judgment that in fact you fall within the exempt category. This is the general form, the status for self-assessment for non-profit organisation generally, and it's different to the sporting one. So I'm just going to go through the form so you get an idea, because I find many people haven't been doing or haven't done a self-assessment of their income tax, or got somebody, a professional who's competent to do it, lawyers, accountants or tax agents who hold themselves out as being able to do this. So the full name of your organisation, your Australian business number. Again, if you haven't got an Australian business number, this won't apply for you. The period of review, always straightforward. The reason for the review, it's an annual review. It will be for most cases. Sometimes a change of circumstances of the organisation, such as a merger or some other major event, change of constitution in the organisation's life, it may be appropriate. Then the next section is your organisation a registered charity? Well, if it is, then this doesn't apply to you. I've just put a red circle or oval around the number there. You see it's QC 46205. The tax office, I would suspect, will be changing its website dramatically, and hopefully making further information available And as such, the links that you may have in the downloaded form from the ATO may alter the URL, the link, and then you get, not found here. If you use this QC code and put it into your favorite search engine and tag it with ATO and then put in the code, it will bring up the particular section to which the printed form requires. So just a tip there that may assist you. Okay, so if you're an organisation charity, you don't go any further. Exempt entity, and here it asks whether you fall within one of the 30 types, and you would need to go to the specific type. As I sort of indicated, it doesn't include all cultural organisation or all employment organisations. There may be others, so you really need to go to further information, particularly the tax statute, to find out whether it applies to you. And if it doesn't apply, then they send you off to lodge an income tax return and to pay tax. In the notes here, you may wish to put how you determined that you're exempt and what class of exemption or section that you're relying upon. Here, the next page, does your organisation meet all the requirements? And you've got to be non-profit, which you'd find out for your constitution, pass one of 3 tests, and there were the tests that I indicated before, which are basically in Australia. So if in Australia, you probably don't apply. Other types of exemption have other sorts of tests, such as the governing rules condition, that you've complied with your governing rules, but it doesn't comply with everything, and that you've used your income and assets according to your constitutional provisions. So again, that will require further research, and you might want to put notes of the constitutional provisions in the self-assessment. Approval. Finally, the approval would have the name of the person who did it, their position held. They may be secretary, treasurer, and then it's recommended that this be put to the board or committee or governing body for approval and sign off. Just note that if you're going to show this to the tax office, it needs to be correctly completed because there are penalties under the Taxation Administration Act, under other acts for sort of lying, being dishonest, misleading, or being frankly reckless with what you tell the tax office. So if you don't know what you're doing, and feel that that's a risk, you may want to outsource this to a trusted professional who can provide the advice to you. So that's the form. The sports form is quite more extensive and requires financial information to be collected and reported. My guess, and it's only a hunch, we don't know yet, my guess that any digital return to the ATO will probably include some financial information about your activities, such as membership fees, sponsorship fees, external income and expenses, and the like. So over to any questions.
Thanks, Myles. Once again, we'll just give everyone a minute to get typing on their keyboard. I'm sure there's some questions out there. Okay, looks like we might not have any questions for this section. Myles, would you like to keep going?
Thanks very
And
much.
if any late ones pop in, we can always address them later.
Indeed. So this section I deal with, what's behind this proposal. And I've written a working paper which can be freely downloaded from the QUT repository of research work, and I'll give you the link to that in the final slide, so you can see all of this in chapter and verse and in far more detail. But basically, the issue arose in the ACNC 5-yearly review. When the Australian Charities and Not-for-Profit Commission was legislated, the legislation included a review, independent review, to be done of the Act and its operations after a period to see whether it needed any tweaking or changes and how things were going. That review, independent review, was held and it reported to government, and you can get a full copy of the ACNC review on the Federal Treasury website by searching. But it recommended that not-for-profits with an annual revenue of 5 million or more be registered with the ACNC. To date, the Australian Charities and Not-for-Profit Commission has only been about charities, and that was a deliberate policy choice. And the explanatory memorandum and politicians at the time said that if it became appropriate to expand its operations to non-profit organisations, then the legislation was drafted with that in mind, so there wouldn't have to be major legislative surgery to extend it to non-profit organisations. So the recommendation was that an annual review be provided for those non-profits who were not charities which had 5 million or more. So these would be, I would envisage that these would file with the ACNC and the documents to be publicly available as it would for charities, and perhaps the same investigatory and other powers and sanction powers of the ACNC would apply to these organisations. At the time, we didn't quite know how many, but I think the estimate was about 500 or so organisations would probably fall within this category. The government, on seeking that recommendation, rejected it. And then shortly later, in the 2021 budget, the coalition government put this in the budget of giving the ATO funds to have an online self-assessment form for all organisations that had an ABN and claiming Division 50 that were not charities. The lawyer in me can't help but pick up the words to submit an online self-assessment form with the information they ordinarily use to self-assess their eligibility for exemption. I've rarely found organisations outside the sports group that would do so. So whether that means nothing, but I suspect not. I'm being too much of a black letter lawyer there. So anyway, it was in the budget for the coalition government. Here's some observations that I would make. Who's the most appropriate agency to check on these organisations? Should have been the ACNC, as was intended originally, or should it be the ATO? The government, the former government, as far as I know, didn't hold any consultations with stakeholders or the industry or the sector. This decision merely appeared. And so we haven't had a discussion about it, which is very unfortunate. I think there are good policy and other reasons for this to remain with the ACNC and for it to have a relatively high threshold, at least at first, to get matters bedded down, as always these things have unintended consequences. But it's the ATO, so don't bug the ATO. It wasn't their decision. It's a government decision. And if you think that there ought to be discussion about this and ought to be reversed, then it's probably a political discussion to be had rather than a discussion with the ATO. They're just merely the agency to implement this. Is this a proportionate response requiring all non-profits under Division 50 that are not charities to have an annual digital self-assessment filing? I think it's unproportionate. In my paper, I give a number of reasons about why that's so. And my view is that all the evidence that I have points to a relatively small number of large organisations and a relatively large number of very small micro organisations. My view is that it shouldn't apply across the board, at least not initially, and there should be a realistic threshold required. The ACNC review put 5 million. Maybe on reflection it might be 1 million, but I think it's not proportionate to require very small organisations to have to do this. There are a number of knock-on consequences of more paperwork, more costs, particularly in the initial years, engagement of professionals, how the ATO is going to check all of these returns, and we think there might be over 100,000 that are going to flood into the ATO. How are they realistically going to check them? If they're not going to check them, then why collect them in the first place? So I think there are a number of those sorts of questions that need to be satisfactorily addressed in any discussion. But again, I say it's a political discussion, not an ATO agency discussion in the main. My view is that Division 50 needs reform. It's not fit for purpose. It's overlapping. It's imprecise. There are special conditions which were hastily inserted into the Act, and even the ATO has given written evidence to inquiries and reviews that it overlaps with regulation with the ACNC and ought to be dealt with. My view is that the government should model behaviour. If they want people to comply with the regulation, particularly if it's onerous, they should get to and provide a decent bit of legislation which is appropriate and able to be understood by the average punter. Next point, it's my view that there needs to be revised and renewed tax rulings. There are some issues in some of the 30 categories where there are doubtful and disputed areas of the law, and those are usually made clear through public rulings, and I think they should be done. We have an updated sports ruling, and I recommend that those bodies that are in sports and recreation have a look at that. But outside that, most of the rulings are quite, if there are any, are quite dated. So I think this needs to be done in preparation, which again points to a higher threshold whilst the vast bulk of organisations get themselves in line. Next point, ATO data collection. If the ATO in the self-assessment form is connecting financial data, then they're going to have a huge database on the sector. There are a number of issues from that. Firstly, it will probably be subject to ATO secrecy in all due course, so nobody will find out about it. But it could be incredibly useful to the sector to have aggregated data reported in the annual taxation statistics publication. And this can be useful for all sorts of things about how big various subsectors are. I mean, how big are the musical sectors, or the other non-profit sporting bodies, useful for lobbying, for grant making, all sorts of things. And it's probably the only source of reliable information about the area. The other issue is how the ATO are going to interrogate this data, and that if what you get in is less than good sound financial data, what the outputs are going to be poor anyway. So we need standardized definition of what is a membership fee, what is an expense, so forth. And at the moment, the self-assessment forms, particularly for sporting bodies, doesn't provide a definition of these expenses or income. And I think there may be definitions provided. I'd also point out that there's a huge amount of work done in the Standard Chart of Accounts for non-profit organisations, which is a data dictionary of standard form terms for governments to use to ask for financial information from non-profits, which is already defined. That was workshopped and settled with every state and territory government and the non-profit sector and the accounting bodies some time ago, and was handed to the ACNC. And so you can find the non-profit chart of accounts and data dictionary on the ACNC website. But if the ATO will be collecting financial data, then it needs to be standard so everybody knows what it exactly is, or the data that they're going to get, or how they crunch it, or find out who they want to audit or investigate. It's not going to be apples to apples. What one person may consider to be a membership fee may not be another person's. When the Standard Charter of Accounts was formed, we found that there were 24 different definitions people had of postage and petties, and over 107 of salaries and wages. So getting the right definition is important. The next point, funding for community education of the sector by the sector. I think this is incredibly important. I think peak bodies should be funded. I think this is going to be a major project for the sector to roll this out. So peak bodies should be funded over and above the ATO. I think community legal service organisations should be funded as well to provide education. And finally, there are, as I indicated, some fuzzy areas of the law where people can genuinely have disputes as to the meaning of words or the meaning of sections and their application. And I think it's important that test funding litigation be provided so that the ATO or whoever is going to supervise this in the end can provide a costless, relatively costless way to definitively resolve disputes over wording about where the boundaries of the exemptions are. Some of the key ones are private hospital and health associations are included in the exemptions. Does this include hospital in the home? Does it include hospices? Does it include day surgery? The ATO has made some noises that often accommodation overnight is required. to fit within the exemption. And I'm sure the other lawyers on this seminar will have other sorts of issues, and these often have been resolved by private ruling, but it would be good if people don't agree with that, that there is avenue for genuine concerns to be elevated to the courts for definitive resolution. So there's some of the issues, and I do in fact go into these in greater detail in the my publication, A Primer for Reform on Tax-Exempt Non-Profits, which you can download from that link from QUT, or if you just put in QUT and Myles on a primer, you'll probably find it in a good search engine. There's the link to the ATO new games and sport public ruling, and another ruling on which is somewhat dated. Now it dates from 1993, and there have been a number of cases since the ruling on 23GV, which is, well, it's a tax determination under the old Act. But this is an example of one that I think should be made into a public ruling and updated. So I'll leave that slide there, but I'm quite happy to take any further questions. And I think we do have some time left, so get typing on if you have any questions.
We have a question from Rob Myles asking, how does this interact with DGR status?
In one sense, it doesn't at all. DGR status is a deductible gift recipient, which has to do with you being the organisation being regarded as being able to give a tax deduction to donors to it. Unlike the rest of the civilized world, which puts them both together, here in Australia we separate them. So just because you're a charity doesn't mean that you qualify for DGR status. Just because you're tax exempt doesn't mean you qualify for DGR status. And the same, just because you're DGR doesn't mean that you're income tax exempt. There is some mention of DGRs in Division 50 in terms of the in Australia special condition, but I don't think you're referring to that. So you have to both apply for DGR status and show that you have income tax exempt status.
Thank you, Myles. We'll just see if there's any more questions. We'll just wait a moment if that's okay. In the meantime, I might just push out this feedback form into the chat. It'll actually come up as a call to action. So I'll do that now while we're waiting for some more questions to come through. Looks like we don't have any more questions at this stage, Myles. Just wondering if anyone does, we have someone typing in the chat, some people saying thank you. Christian says thank you, and Chris says thank you. So if there are no more questions, I guess we can wrap this up. Is there anything else that you'd like to say in closing, Myles?
Thank you very much. Again, this is going to be a very time-sensitive presentation, so make sure that you check with your advisor, or at least on the ATO website, for any updates, because it will develop rapidly in the next year, in the first half of the next year, I believe. And I wish you all the very best of luck.
Thank you so much, Myles, and thank you also to Paul for chairing the meeting today. And we will wrap this now. We're just a couple of minutes early, but that gives people time to maybe grab a sandwich before their next meeting. So thanks again, everybody. Have a great weekend. And if we don't cross paths again before Christmas, have a great Christmas as well. Bye-bye.
Bye.